With Solana having an absolutely amazing start to 2023, I see many people getting extremely excited about what the short-term, mid-term, and long-term future looks like for Solana. But in today's video, I want to give you guys just a bit of a warning because I am seeing some danger signs, especially on the charts, that I think you should at least be aware of. So let's not waste any more time at all, and let's get straight into today's video. So what we can see from Solana is that it has now worked its way all the way up to about the $25 to $27 level, which I told you all was going to be absolutely crucial for the future of Solana's price. I told you as we were holding these levels back in June and holding it in August and September and October before eventually losing it due to the FTX crash, that getting back above those previous points of support was going to be the complete deciding factor of if we are genuinely going to see Solana recover or not. Realistically, where we were before the whole FTX situation was in a not too bad spot, right? Solana was just seeing a fall just like every other crypto was falling. But the moment that FTX crash did happen and we saw Solana's price itself fall nearly 80% within the span of a couple weeks, people were questioning, what does the future of Solana look like now? Well, I think it's really about to be determined at this point. You know, whenever we get back towards these levels, we have to make a decision. Is Solana better off without those VCs and in a better situation that it was back then? Or is this truly detrimental to the inherent intrinsic value of Solana as a whole? And given that if that is the truth, then we shouldn't be able to recapture these levels. And so I told you when we come back to retest them, things are going to get very, very interesting. And look where we are. So at this given point, I want to pay attention to say, okay, well, what are the charts implying while we are approaching these massive levels around this $25 to $27-ish level? Well, the first thing that I'm noticing on the daily charts is that we are getting a warning that a pullback is going to happen. Now, I'm not going to go as far to say as a major crash yet, but I am going to say a pullback. And I believe that pullback could be as far as back to $15 and about 22 cents. Now, the reason I say that is because of the structure we are seeing right here from January 14th to now. Typically speaking, when you see an uptrend, you don't want to see too much overlap. If you see overlap, you don't want it to be an ascending overlap. And if you see ascending overlap, go ahead and assume that a crash or correction is on the way. What I mean by that is, as you can see, we were getting these moves to the top side where we would go up, go sideways, and up and sideways. And none of these lows really interfered with these highs. We didn't really see any overlap between these lows and the previous highs to where we would see this little middle ground here, right? We were basically holding our weight and establishing support above previous point of resistance, which usually implies that an uptrend will continue. But as you can see here, these lows are now starting to go below the highs, and there's getting to be some overlap right here, which is generally a bearish sign. Now, also what we can see is that when compared to the RSI, we are getting divergence in which the price itself is setting higher highs and higher lows, which is relatively bullish. The RSI, though, is starting to show us lower highs and lower lows. Now, this typically means that we are seeing some type of slowdown in momentum and some implied resistance from wherever we are, which is no surprise here, right? Because we would expect resistance from this previous point of support, right? The bears at least are looking to see an SR flip in which your support flips into resistance and then you get forced back to the downside. That's what the bears want to see. So it is no surprise that we are seeing momentum slowing down at these levels. The issue is that whenever we see this, especially on the daily time frames, usually some type of correction does happen. If we look back at something like Bitcoin, I want to show you guys on a bunch of different time frames on why this could be kind of detrimental. Let's go all the way back to the market highs. Let's just start to see this, right? When we were super overextended, we were seeing this thing push into the $60,000-ish area off this huge move to the upside. You can see something very similar started to happen. We weren't getting any overlap, up and sideways, up and sideways, up and sideways, until we did start to get some overlap in which these lows were starting to go below these highs, and there was going to be that middle ground there. Now, when you compare that to the price, right, when we compare that to the RSI, we had higher lows and we had some higher highs forming, but this RSI, on the other hand, was seeing lower highs and it was seeing lower lows. And as a result of that, of course, capitulation did come. You can also look back to August of 2021 for Bitcoin. Something similar did happen in which we were starting to see some overlap, in which we weren't seeing any at first. We were good, still no overlap, and then we started to see overlap. Once this overlap started, we were in an ascending structure. Off of that ascending structure, our RSI was also starting to show us a descending structure with lower highs and lower lows, and because of that, we did see that correction back to the downside. Now, of course, we did hold this and continue upwards, but that wasn't until we did see a capitulation of roughly 25% to the downside. So as you can see, historically speaking, for many cryptos, this situation does typically lead to a pullback to the downside. That's just what it usually will do. And so at this given point, I am expecting nothing short of a pullback. I do believe that unless we are capable of breaking above $28 and holding above it, remember I said that, $28, I do believe that a pullback is likely going to happen. So if I was going to say open up a short trade here, I would be setting my stop loss above $28. So basically to say I would open up a short trade right here. If the price does start to go down, I'm right, I'm starting to make gains. But if I'm wrong and the price does get another push of this wave back to the top side and gets back above 28, then who knows? Maybe we are in a position in which we really can continue, and this was just a bit of a reset on the charts before looking to make another push to the top side. That is within the realm of possibility. It doesn't seem as likely, but it is possible. And so at this given point, what I am seeing is that while we are below $28, we are at a relatively strong risk of seeing some type of capitulation back down to some of these lower levels. My guess is our first pit stop could be as low as about $18.50, considering that is where we put in some resistance here, and once we broke that, we went straight vertical. And so obviously this is going to be kind of a previous point of resistance. And then if we were to lose $18.50, that does put us directly in line, in my opinion, to come revisit $15.22. So you need to be paying attention to these levels right now. Remember, our whole goal on this channel is to win these whale games, win the games of manipulation, and not fall into their traps. And so although things are looking good and looking like they're going to continue upwards, or we're getting higher highs and higher lows, you got to zoom out and see the bigger picture, that we're running into a massive point of resistance, not just technically, but fundamentally. This is back before the FTX crash, before all hell broke loose on chain. So are we capable of recapturing those levels and saying that, hey, FTX being out of our hair and all those VCs being flushed down the toilet is better for us now, and so now Solana can really see some growth? Or is it, no, Solana was built off of the back of those, they need that funding, they need all of that on-chain activity from some of those projects, and because of that, we shouldn't come back up here, and we need to start to work our way back down and get rejected. So not only technically, but again, fundamentally, there's a reason why we can get rejected right here. And our charts themselves are showing that the slowdown is now in progress. So you need to pay attention to $28. Do we break it? Do we not? If we don't, and we start to get rejected, and you see us lose this low right here, this little $22 low, boom, we start to get a lower low, expect to pull towards this $18.50-ish level, expect to push towards $19, and that could be a fall as anywhere up to 20 to 22%. That is within the realm of possibility, okay? I'm not saying this has to happen. Again, if we break $28, we're probably good for even more continuation to retest as high as $30, $35, somewhere up towards these levels. But that is not even the thought for me until we're capable of breaking 28, okay? Now, if you do want to stay up to date even more with some Solana technical analysis, I will be adding it to my newsletter that I am sending out every Monday and every Friday. I didn't have Solana in the last one, but I will be adding it. And then in that newsletter, I also do a lot of technical analysis, market analysis. I give you guys updates and information about everything from Bitcoin, Ethereum, BNB, XRP, etc. And then at the end, I give my general thoughts on all of crypto as a whole, and then provide you with some pretty important links. Now, if you do want to sign up for it, literally all you have to do, go to the first link in the description, enter in your email, and press subscribe. And then at that point, you will be subscribed to the newsletter, and you will receive it every Monday and every Friday. But overall, make sure that you are paying extremely close attention to how this plays out for Solana. Remember, the fundamental development of Solana is going to be different than most cryptos right now because of what happened with FTX. So you shouldn't ignore whatsoever warning signs that present themselves, because remember, these charts are reflections of investor psychology, and investor psychology, especially right now, can be all over the place. So don't get caught off guard by any crazy moves. Make sure you stay up to date and make sure you stay on your toes, because this thing is going to get volatile and you don't want to miss out. But other than that, I hope you guys did enjoy today's video, and I will see you all tomorrow. Peace.